And welcome to week number 2 of the year, starting off by looking at inflation expectation overlaid with EURGBP in orange. I'm going to quickly redo it here again because trading we introduced a new feature on a comparing symbol. So if you hover your mouse over any broker and asset you're looking at, you can see different types of way of overlaying price over your current chart. To get the same effect as you usually used to get, you just need to click over new price scale and you should get a desired effect that you originally used to get. There's other two options now where price will show in a different way when overlaid on your current chart. Now, inflation expectation is starting to come off around 2, a little even higher than 2, which was, to be honest, a significant move, mostly on the back of oil, with oil continuously climbing with the help from production cuts from the OPEC and OPEC Plus. The consensus call is that this will continue climbing, EURGBP will be climbing with it. In the near term, however, before the US new president inauguration, it's a little bit trickier to time that trade, specifically when you're already sitting at a high. It's never attractive buying something a little bit more expensive from what you could have bought it cheaper a few weeks ago. But keep monitoring that. It's going to show you the Eurozone inflation 5-year swap rate as well, overlaid with oil Brent. It's really all in unison, so you can see inflation swaps are moving in hand with oil prices climbing. Now, as dollar goes lower, oil prices continue to go higher as well. So it's a very highly correlated market at the moment. There was until Wednesday when the Democrats won, where things slightly changed. So I'm going to show you EURUSD. It opened with a gap up on the week. I'm going to highlight Monday. So the gray area is Monday. Opened with a gap up around here. Traded a bit higher. Came close to closing the gap, but actually did not place the high of the week until Wednesday, where it was still unclear if the Democrats gonna get a blue sweep in the Senate. Now the base case was, if the Democrats win the Senate, the dollar should come lower. Be that as it may, that was either priced in or it was a misinterpretation. EURUSD totally gave up a good 100 pips, closed the gap, started to bounce a little bit, but going into the next week, I am expecting this zone to give away and we see a full dip towards 121.24, as I expect the continuity of the Democratic sweep story, whether it was a profit taking or whether it is a repricing ahead of the inauguration. I expect EURUSD to come lower, as that's the only theme we could have right now. Add to that a little bit slow vaccination in Europe and specifically in France. A little bit risk on the fiscal side from Germany on Friday when they get a new election in the CDU party, and euro doesn't look as attractive anymore in the short term. In the long term, it will continue climbing along with the yuan, but in the short term, I really expect establish an early short on Monday to start attacking these levels here. Equities are currently front running the stimulus. I'm going to have a quick look at S&P 500. I'm still bullish towards 4,000 in the short term, so I'm still expecting to see 4,000 levels. I'm really getting my guidance here from Vix, where I'm still expecting volatility index to come under the 20 area. It hasn't quite closed the gap from the March crash yet. Let me recalibrate this chart. So this is the daily Vix chart. It tends to move in counter correlation to the S&P 500. Really expecting these lows to give away, possibly close the entire gap here, and that should give S&P 500 impetus to move towards 4,000 on back of the possible stimulus coming from a Democratic sweep. So usually in these circumstances, market tends to front run a full stimulus bill, as it's almost given that something like that will get approval from the Democrats as a representing the House and the Senate at the same time, so they're controlling both chambers. Looking at data, there's not a lot of data until Wednesday. So on Monday we have BOE speech, and that's an important speech at 2 o'clock because she will be talking about negative interest rates for the UK, how feasible it is and how much likely they're going to happen in the UK. That will have a greater implication for GBP. I'm going to show you the short-term yields for UK. So they're trading in a very narrow range. If on Monday we're not getting a signal that interest rates going negative, I expect these yields to move a little bit higher, short-term yields, and pound to find a strong bid as well. So that's something I will be looking to on Monday. On Tuesday, not data I can really work with. On Wednesday is one of the core data we look at every month, which is the monthly CPI print for the United States. It tends to move all assets. As a matter of fact, every month after the CPI print, you tend to see some good swing trades develop, specifically on GBP USD. So I'm going to have a quick look at GBP USD. Beta SMA, we are a little bit bearish on EURUSD in the beginning of the week, but there's one or two levels I'm very keen on to see how it develops on GBP USD. The first level, which I'm really keen on getting a little bit more aggressive, is this area of 35.20 to about 30-40 pips lower. So I like to see a bounce in this area to scale higher prices. If that fails, we have other levels to work with along the way, but I probably won't be as aggressive as I would be aggressive in the first touch of this level. This level has a little bit more significance because it started the bullish narrative of the Brexit story last year, and we never really got a decent dip to buy into that. So that level would be very interesting for me to trade into. But I find EURGBP a little bit more compelling to short because I'm a little bit bearish on Euro already. A sell on EURGBP is a little bit more compelling for me. Ideally, I would like to see a sell early in the week against these levels here to attack lower bound into 88.62. Now there's a lot of there's a lot of support to plow through here. There's a decent level here. We got an 89.58 level, and until we can hit 88.60. There is no exact catalyst that we can work with early in the week apart from the post CPI moves. But to put things in the big bear perspective on EURGBP, what we're looking at is to establish a short against a level in here, start attacking 88, in the medium term hit 86. However, there is a possibility for whatever reason of on Monday the bets of the negative rates increase from the UK, that we see pound on the back foot. If that happens, I'll be looking at this level, which is a 91.50 about, and a 30 pip range. I'll be looking to establish a short from there to attack these lower bounds on EURGBP. So the overall trend out of this really contested zone, EURGBP, is for me to establish a short towards breaking 88 levels and then 86. If I can get it from this level, good. If not, the higher level will do as well. Last one, we will have a look at USDJPY. There's a bit of a worry that the retail sales come on Friday won't be as rosy as they may. There might be a consecutive negative print. We've already seen not so good jobs numbers on Friday, so they could feed into that. I'm really looking to establish a new short in USDJPY around the levels of 140.20, 28, all the way to about 20 pips above it. So that looks like a good zone to look for sort of a reaction if USDJPY is to continue its move lower. Again, most of these USD moves started on Wednesday on back of the Democratic sweep. It is either profit taking, which seems to be the most plausible thing. It's profit taking ahead of that, because the thinking was that USD is going to become weaker once there is a Democratic sweep. Once the news became reality, it was selling the fact. which is driving USD currently high against all pairs. So we try to keep a little bit more simple and not get into too much of the other details. And as long as our profit taking is active, there might be the case that some of these levels get violated and we don't get the exact bounce we're looking for. So timing the trade is a little bit more difficult, but I believe the direction is lower for USDJPY. And for EURGBP, we're looking for lower as well. Again, timing the trade could become a little bit more trickier regarding which levels a core short will be more feasible. So we can take out these levels and then starting to look short from this level. If this holds, ideally immediate start to crack onto 88.60. Key data next week is CPI, and on S&P 500 we're still looking for some upside into 4K. That's sort of the main themes we're looking at in the next week. That would be all from me. Thank you.